macroeconomics floats your boat, then there'll be plenty for you to latch onto in the week ahead, as Washington DC will host the International Monetary Fund and World Bank's spring meetings from the 20th to the 22nd of April. Closer to home, the big macro news of the week is likely to come in the form of the latest monthly inflation figures here in the UK. They're due out on Tuesday the 17th. Remember that in February, the headline Consumer Price Index, or CPI, rate of inflation eased to 2.7%. The Office for National Statistics' new preferred measure, CPIH, which includes housing costs, well, that slipped to 2.5%. And the rate of growth in the Retail Price Index, or RPI, that retreated to 3.6%. And don't forget that in the following week we'll get the latest UK wage growth numbers. In January, total wage growth including bonuses reached 2.8%, higher than the CPI and CPIH inflation figures to show the first signs of real wage growth in a year. Looking at things from the bottom up, around a dozen FTSE 100 firms and a good number of FTSE 250 companies are due to release results or hold their annual general meetings. They include Primark owner Associated British Foods, Informa and miner Rio Tinto on Tuesday the 17th. Another miner, BHP Billiton, Bunzl, RELX, RELX, and real estate investment trust Segro on the 18th. Rentokil and Unilever on the 19th, when we'll also get an update from struggling retailer Debenhams, and then on Friday the 20th, Reckitt Benckiser. But for me, the company really capable of causing a fuss in the week ahead is Sky, when the broadcasting giant unveils its third quarter results to the end of March on Monday the 16th of April. The company's hardly been out of the news since December 2016, when the Murdoch family's US-listed vehicle, 21st Century Fox, launched a £10.75p a share bid for the satellite broadcaster. Since then, that deal has been assessed by the regulator and the Department for Culture, Media and Sport, and the government has questioned the deal on the grounds of media plurality. In other words, how much control the Murdoch family could exercise in the British media in the event of the deal going through, thanks to their broadcast, radio and newspaper operations. Then, in December 2017, things got even more interesting as Walt Disney bid for Fox, only for Comcast to then float the idea of a £12.75p a share offer for Sky. Disney then came back in saying it would buy Sky News to try and placate the UK regulator, smoothing the path for Fox to buy Sky and Disney to buy Fox. Still with me? The upshot of all of this, in crude terms, is that Sky shares are trading above £13 a share, north of both the Fox and Comcast offers, to suggest that investors may be waiting, or certainly hoping, for a knockout bid from one of the three big media beasts: Fox's Rupert Murdoch, Disney's Bob Iger, and Comcast's Brian Roberts. As to all of this, how it plays out, well, watch this space. But on Monday the 16th, we get to see what the three media moguls are fighting over when Sky releases those Q3 numbers. Analysts were looking for three key performance indicators in particular. The first is subscriber figures. Sky ended its first half with 16.3 million subs in the UK, including wholesale, 5.3 million in Germany and Austria, and 4.8 million in Italy, for a total of 26.4 million. However, subs growth slowed in Germany and fell very slightly in the UK and Italy, a trend which Sky will be looking to arrest. This chart here shows year-on-year growth in subscribers by region. That takes us to the second item, which is churn and how many subscribers actually drop the service. In the UK, that figure's been pretty consistent at around 11%, but it spiked in the first half in Germany and also rose in Italy. Then we come to ARPU, average revenue per user. It's been pretty steady in all three major markets at £46 in the UK, €33 in Germany and Austria, and €44 in Italy. These three figures will then go a long way to driving sales and profits. At the 9-month stage a year ago, Sky recorded £9.6 billion in sales and operating profit of £1 billion, with the UK making £918 million of that. For the full year, analysts are looking for mid-single-digit growth in sales and profit, so that seems a fair benchmark for the 9-month numbers too. Thank you for watching, and I look forward to seeing you next time.